Hello, everybody. This is Max Farrow. This is DexFXCopy.com. This is your daily update. It's January 11, 2018. Boy, the month's flying by now. Listen, my friends, we have a lot to discuss, so I'm going to try to make this very quick. Okay. Some of you had seen that we have the Dex 3000 has started firing off again, but we have a new page on the DexFX copy, which I need you guys to have a look at. And that's this page, the DexFX 3000 or the signal providers process here on what each one of the signal providers are. I'm going to be getting the Grinch on right after this process. So each one will have where the name came from, what it's all about, what does it forward test, how long is it tested. There'll be some other information that will start to slowly add on to this process, some historical stuff, more historical data, that kind of stuff. But I quickly wanted to go over a few of the key points here of the signal providers. We have the 4 signal providers because each one does its own little thing. That's right. Each one has a process that it does in order to fulfill a particular part of how to trade, because everybody's different, right? Let me see if I can blow up a white screen here. Not that I like to use paint at all. No, that ain't going to. Okay. Let's just draw it in the screen like we usually do. Okay, so just so you know, each one of these signal providers has a different format on how they trade, okay? Some of them are more compliant with U.S. brokers such as FIFO or hedging. Some are more about the stop loss, have a very structured, sharp edge of stop loss and take profit. Some are more flamboyant and dynamic, and some have a revenge trade, recovery trade network, basically, is what it is. Now, let me sort of break down each one for you. And then you're also going to see a video of what the Dex 3000 is and how it works. There'll be a video here soon. I'm hoping by the end of the day that I'll be able to get all these on, and even for the Grinch and have that on. Okay. Now, the Dex 3000. This is one of our flagship bots that uses a way of trading that's very unique. So first, there is the event. All of our trades use an event process, right? Which means a crossover, an immersion, or some sort of process that happens, right? A movement of momentum, something, right? But whatever that event is, prior to each one of those, the DexFX 3000 waits for the event to happen, and as it starts to climb, it places a trade. Now, it'll place a trade in the anticipation of speculation of reverse, okay? So that means that here, we would put a 0-1 lot for a sell, okay? And if it does do it, then, you know, we wait for it to travel a certain level and blah, 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 we make our money. If it doesn't, it's going to wait for it to get to a particular percentage of a level and then place another sell for a reversal trade, okay? If it doesn't do it there, it'll keep going all the way up to 0.08. I know. You may think that that's a lot, but when you're using these kind of processes, it's not very much. And if you have it on 2 or 3 pairs, if it's running on, if we trade on 2 or 3 pairs at that particular time, there is also the possibility that you're going to create a what we call a fish belly, right? And this means that the equity that's going to take, the margin it's going to take to do this could be pretty big. If you have a very small account, $100, $200, $300, you're definitely not going to be able to do it. You're going to be very close to edge on a $1,000 account. So you want to do between $1,500 and $3,000 in an account like this. And I'll have that information on here as well. Now, what happens in the most part, as this thing starts to go up and up and up, if it does get to those things, you know, because this should be 5. If it does get to those levels, what we're waiting for is for it to come back down and then starts to profit in these solutions. What this creates is 2 things, 3 major conflicts in a way, right? First is that this could be considered a lot of money, right? Mucho bueno, right? Lots and lots of money. But it also means that this is the first trade that went on. This is the second trade, third, fourth, and fifth. When you go to close them out, you can't close these out because our system does something else. As it reaches these higher levels and then starts to come back down, it starts filtering off and scalping off amounts of the trade. So on this 0.05 trade, it might start trading and selling off 0.01 lots at a time. So this might go to 0.4, 0.3, 0.2. But unfortunately, FIFO is called first in, first out regulation. It's a regulation that brokers put on themselves here. Why? Because this is a popular strategy, and it's not really a hedge, okay, where we're doing a sell here and a buy here, and hopefully that if it hits, you're going to make money somewhere in between as it scopes over, and you'll keep filtering off, because it's not illegal. It's just against the rule of the broker. Now the problem is with that is if this is first trade, second, third, fourth trade, first in, first out means that if this pair starts to go down, this one starts winning, number 4 starts winning, number 5 starts really winning, you got to close out sell 1 and sell 2. That's right. These are for a loss at this time. And then sell 3, you got to close this one out. And you got to wait for the only ones that are in positive to be able to start closing out. And this causes an issue with the strategy because it'll mess the profit margin up. So the brokers that it works on are anything that's overseas. But again, keep in mind, I'm not here to advocate Trader's Way or any of those other companies. It does work on Forex.com, which is really I'm really confused about because we use an ECN overseas and it works. We use the United States one for the FIFO problem and it doesn't work. But that's okay. We have solutions for you. You can use Simply Forex, Spot Trading Live with Max, or even the Grinch. They all work. Okay, so there's plenty of opportunity. Now, the pros to this is, man, there's a lot of opportunity to make money. The cons to this is that it has an equity curve that looks like this. Right? I call this the fish belly. It's a term that I coined. That the margin gets dropped down, which is called our drawdown, and this could have a pretty big drawdown if you're not careful. Now remember, we can always filter off trades on what pairs we want to use, or if we only want to use it on one particular pair. If you see a common pair, like if we go to let's go over to our portfolio page. Let's go over to the DEX FX 3000. See, here it is right here. You see it right now, right? You can't see it. You can't unsee it now. You can't unsee this process. This is the DEX 3000. This is the equity curve that we have, very slow and methodical and climbing. But you get this equity run. Now that we're up here, it's just going to keep going and going and going. Equity is going to keep going. It's going to keep doing this number as it goes, right? So the bigger your account gets, the more equity. Less equity is going to be kind of affected to the process. But don't worry, right? So here's what we do. You come down in here, you go to the summary, you see the effective pairs on here, pick the one that is the best, and just go with it. Look, at this one had 70 trades. You can go into your DEX FX system, and you go to the DEX 3000, come over to the EA system, turn it on, okay? First off, you do a lot multiplier of 1, yay for us, and then you can say don't trade on all the other pairs or just trade on the pair and put that one in there that you want to use, right? It's that simple, folks. It's that simple, okay? So you can find multiple pairs that you want to do. You can find only one pair that you want to do or what have you, but it is that simple. You use the summary page from our DEX FX 3000 page to come here and pick out which one is the best. Which one has yielded out the best result? You got 70% success on the Euro CHF. You got, but again, you also have to look that Euro CHF has been holding on pretty far for a while now, right? It's been going since the 20th of last month, 19th of last month. So this has like a very long term review to it, right? So if this one were to close out, this equity would no longer be there, right? In fact, it'd be in the hole. So you got to kind of pay attention to what's on the board already and how are they doing, right? So in my case, what I would be looking at is the either Great Britain pound USD, right? The pound dollar, or the euro pound would even be pretty good. Okay, 61%, 121 trades, 177 bucks. Right? And again, that's at the 0.01, 0.02 process that we do. Right? But there's a lot of trades to go on. So these are ways that you can omit this big fish belly in here if need be. You don't have to take all the trades. Remember, this is about filtering. All right? So, secondly, let's talk about some other things we're going to... Oop, wrong one. Where are we at? I have too many windows open. I do apologize. There we go. Okay. All right. So, the next thing, Simply Forex Bot. Okay? The Simply Forex Bot uses a condition of 2 or 3 major events that happen. There is a crossover and an immersion process that happens on the Simply Forex. And then what happens is that it will place, as that event happens, it will place a stop loss and a take profit. If this was a sell, this would be the stop loss. This would be the take profit, right? Now, usually, we on this system, we are R1, which means a risk to reward ratio of R1 to 2 plus, or R1 to 1 plus, okay? And this thing will run just like that. Sometimes it'll be R1 to 4. There's even an R1 to 4 in there. It's pretty powerful. That means it can lose 2 times, 3 times, 4 times, and then win once and break even. Okay? There's a lot of power in there. So with that, the Simply Forex runs about 2 or 3 times a day and does pretty well. If we jump over to our system over here, we look at the DEX Simply Forex portfolio. It does pretty well. As far as we just recently knocked down it to 0.01 of a micro lot. Why? Because you also, on the Simply Forex, want to come to the summary, click on the summary, and omit the pairs that aren't doing well. The AUD USD, the Euro Great Britain Pound, the pound dollar. And then you want to go back into your system. If you're following the Simply Forex, you would come in, go to the EA on your signal providers process, go to the EA settings on the Simply Forex, click on that, and come down and put the pairs in that you don't want it to do on. Now remember, if you have a suffix at the end of your pair, like I do for my Trader's Way account, it says I at the end, okay? Or if you have one in the beginning, some of them have that, some of them have a number, that kind of stuff. You got to make sure that you're using that as well so the machine can understand it, okay? And then you put a comma in between. If you hover over the little question mark, it'll tell you exactly what to do. All right? So it's that simple, folks. There's not, this isn't about me doing, I mean, I've done all the work for the strategy to get you there, to get you to a point to where we can see what's being used. The data is there. We just have to filter it now. That's what this beginning set is for. Learning how to trade on demo is to get you the information. Okay? Is to get you the information, is to house the data here, okay? So you as the customer, as the client on your system can say, okay, EA settings, filter, I'm just taking the Euro USD because it has the best rate to make your money. Then once you get to your consistency value, right? You see me say this, I've said it in hundreds and hundreds and hundreds of videos. As soon as you get to your consistency value, then what? That's right. Then you simply add volume. And that'll get you to your goals. Right? So there's some great opportunity for you, but we just got to do a little work to it. Now, let's talk about the Trading Live with Max. Very simply enough, with Trading Live with Max, what I'm doing is that I'm using the Simply Forex method of an event crossover and a little bit of immersion, but also the Simply Forex system uses a more macro sweeping look of a crossover, okay? What I do is that I'm looking for, I'm following that trend, but I'm also using a very dynamic process to say, okay, if I'm in a trend and it breaks this level of immersion, then this is my buy. I'm going to put in for a buy. Or if I see that there's a potential for a crossover to happen for speculation, pre-speculation, then I might put in for a sell, put in my stop loss, put in my take profit, wait for it to start moving, move down my stop loss, keep moving my stop loss down, maybe even take off my take profit. And I'm doing this process to called track a trade. And what this means is that I'm trying to secure profit as we go down. You've seen me talk about this before. So in some cases, I could lose 4 or 5 in a row that, the speculation wasn't right, so it goes against me. I try to move stuff around. You may even see a loss in there of minus 2 or 3 pips, because what I'll do is that the trades here, I might put a stop loss up to here and a take profit down to here, which is a really incredible R value. But as time goes on, it starts to load up, right? And I know when it does this, I don't need it to jump all the way up to here to prove me wrong. If it goes to here, it's going to prove me wrong. So I'm going to pop the stop loss to there. That way, if it does go against me, then it does its thing and it goes up and does whatever. And we're not out that much. But if it doesn't, then we got a potential to make some good money. Okay? So that's the Trading Live with Max. The Grinch uses a different format. It uses an event to happen. We won't say what that event is, priority, but that event happens, and then it puts a trade in for a sell for 0.01 of a lot. And what it does is it says once it gets to $1 or once it gets to 13 pips, okay? We'll just talk about that. Once it gets to 13 pips, close it out. Simple, right? Now, on the other side, if it gets to 2.6, or if it gets to 26 pips on the other side, we say close it out. Now, if this trade loses, okay, we know that it kind of went against us here. It will immediately put a recovery trade in once it hits a certain level, which is priority, for 0.03 pips in that opposite direction. And it wants it to get to plus 4.9 or 49 pips. Not 49 pips, I'm sorry. 13 pips as well. And once it gets to plus 13 pips. Is it 13 pips? Yeah, I think so, something like that, I bet. All right. For it to be able to recover, because now we're doing 3 times as much. It's going to cover our fees. It's going to bring us some more money. It's going to go that process. Now, if this loses from this, it's only going to go up the other amount of pips again. There's another certain amount of a stop loss, which is 1.3, or 13 pips again. I'm sorry, 13 pips. Keep doing the 1.3. Okay, and then we close it out, and we don't revenge trade. We don't recover trade from there, and we just take our loss. But that's the long and short of it. It does pretty good as well. Now, when this happens, this is also going to give us a summary when we get back into it, because we had a little problem with the Grinch the other day because and I'm going to be honest with you, and it's my fault, and this is why we had to unfollow. I got to have all you guys unfollow, take those trades off, do whatever. There's only a handful of you that had it, but there is a take profit button, a stop loss button, a recovery button, and a break even button. And they were all depressed. They all had their solutions on but one. Can anybody tell me which one? That's right. The stop loss didn't. I'm sorry. I thought I had it set in there. I had the number in there. I had the number in there set, but it wasn't checked off. And that was my fault. And I do apologize. So when it started to really go against us, I thought it's not supposed to be that high. And then I started waiting because I thought I had it right. Then I was checking code and redo it. So that's why we're in beta with these processes. And I can't thank you enough for all of you and your patience. Some of you reached out to me on that, and I appreciate that. Thank you. All right. So hopefully this found you well. Hopefully you got the information you needed. There's some more stuff that's coming. There's some more videos. There's a lot more programming that's happening. I want you all to please be very patient. If you see anything, give us a call, give us a write into Facebook, write into email, go into the chat room. There's 50 million different ways to contact us. So don't feel embarrassed. Don't feel like you're overwhelming me or Max is too busy to talk to him. That's why the phone number is there. If I was too busy, I just can't pick up the phone, then I'll try to call you back. If I can't get back to you then, call back. Don't suffer, let us know what's going on. It's very important to us as well. I'm Max Farrow. This is DexFX Copy and Dex Trader and Our City Investments. And as always, trade well.